Good day, fellow chart watchers. It's Greg Schnell, and I am here with the June 22nd U.S. market review. Thanks for taking the time to join me. We had a few good bullish signals coming out this week, which was nice. I'm still a little nervous, and I'll explain why in the video. But in general, we have more bullish signals and should be getting a little bit more optimistic, I think. Moving on, to find any of my blogs, I'm just going to quickly work through this because we want to speed up today. Any of the blog articles there, feel free to check them out. Please subscribe if you're interested. Contact information, gregs@stockcharts.com or on Twitter @SchnellInvestor. The agenda today, big up week, a week Friday, and it was options expiration, quadruple witching options expiration, so super high volume day. Still makes me nervous because of that. Gold rockets above 1400. I think for all of those following, we've been able to call that. Last week, gold had kind of moderated a little bit, was just kind of trying to hold its breakout and then ended up rocketing through. So that was good. Commodities continue to improve with the U.S. Or with oil going up and the U.S. dollar going down. Copper, steel, aluminum, coal, all of those tried to look good. Nothing really in the ags, but silver and gold were the big story. Transports and semis are also making me nervous, and we'll get into that. Hong Kong and Shanghai look very tempting to go long. The Nikkei looks like it's sitting on a samurai sword edge. Just very thin levels of support here. The chart just continues to struggle to go higher. Maybe it does, but I think the yen's about to soar, which usually puts pressure on the Nikkei. So that's kind of the way I'm looking at it so far. Let's get into the charts. So first things first, CRB, we're going to start in the commodities, so I don't belabor the point, but it's this US dollar stalling at this 97.5 level. We've been talking about it for 4 years, and it continues to stall there. So anyway, here we are, rolling back over, but the big news is commodities are now trying to make a higher close. So it closed last month on the right on the lows. Most markets did, including the indexes. Commodities have soared halfway up last month's bar, whereas the indexes are all the way back up to the top. Okay, so this is this nice big push here on the commodities coming off the lower Bollinger Band. Note this higher low setting up in the momentum here. If that's going to happen, so you can see the PPO histogram made it up, which means the momentum is starting to improve, and this histogram goes positive when these two lines cross. So we're watching for this to start to take off to the upside, and obviously that would be very bullish. With the breakdown in the US dollar this week, so we had one a couple weeks ago, a bounce up, and now kind of a confirmed breakdown. I think it's pretty clear to me that the US dollar wants to go lower and the other currencies are going to go higher. Hopefully we get time to cover that off. This is the commodity tracking fund for commodities. One of the issues I've got is, look at this beautiful upsloping 200-day being support, now being resistance. Got a little bit to go here, starting to make me worry, but the breakdown in the US dollar makes me much more confident, and I really like the move I saw in the emerging market currencies to confirm my bias. The West Texas Intermediate crude trying to get back above the 10-week moving average. That $56, $58 level, go back here. You can see 53, 54 in here, but the bottom of this move up here was in around this 58, 59 level. So we're coming up to that soon. We'll see what happens. Natural gas bombed out to new 3-year lows and continues to push lower. Again, in commodity land, when something just keeps going down, you want to look at it for a reversal. Usually the nice hard crisp bounce off the bottom is usually worth trading. Heating oil, trying to get back up above the 10-week. As long as it's below, it's bearish. That fire in Philadelphia caused a little bit more push up on the gasoline. We'll keep watching that one to see how that ends up solving. Corn had a little down week, hardly anything to speak of. Soybeans were sideways and wheat was down slightly. You can notice though that all of them are at important places on the chart. Well, not corn so much, but on wheat, this horizontal resistance, and soybean just barely above this trend line and not above the prior high. So we'll want to keep watching that. Okay, gold, the big all-star, nice move this week. Finally got that big breakout to a new 5-year high, and there's still people that don't believe that move. I think the move in the yen, the move in the emerging market currencies, all of this is set up for gold to go higher. It might pause for a week or two just to absorb the $100 gain, or $120 gain off early May. But this breakout's real. Any sort of a pullback to 1360, 1370, and I'd be a buyer. So like this, I love the fact that silver's starting to break out of its downward trend line here. This looks very good. There is a little friction and resistance at 1550 on silver, this red line. I didn't draw it over so it didn't get so busy, but that's about one thing that we want to watch for. But a break above that, this second break through these lines is a pretty important signal to me. So I like the way this chart looks, and I especially like it on the back of a failing US dollar. Copper finally turned up, got back above this trend line it had broke, so that's bullish. Wouldn't mind seeing it get back through the 10-week moving average. And the same thing on aluminum. We see the moving average, this downslope, it's all kind of joining together here. We need a big upturn on that. So the industrial metals aren't out of the woods yet, but getting a little bit better. Looking at livestock, that chart's just ugly. Let's move along. Looking at sugar, it just keeps holding this trend line, and same thing on coffee, just sitting around here. Both of them look like they're ready to pop to the upside, but until they do, that's a no. Cocoa broke out to new 1-year highs here, but just kind of meddling up here, nothing really great. And then looking at cotton right down here at 3-year lows, so nothing good on that chart. HMMJ, this is the marijuana ETF, really a risky place. I saw a spreadsheet of about 100 marijuana companies and about how much all of them are off their 2019 highs. And I think the best case scenario was 13%, then quickly jumped to 25% for some of the bigger ones, 30%, and lots of the smaller ones are 70 and 80% off their highs. So I think this is a very worrisome area. The one thing I would say is that there's a support level due to relative strength here, and I have drawn this off of the lows back in 2017. We can change this line slightly, and what we could do is we could run it off of here and make it more like a horizontal line. I don't know that that's a better line, but I would just say if this breaks down in any way, it's already breaking down a little bit more than I want to see it break down. We're starting to see the full stochastic turn up, and the PPO is right at 0. So if this was going to turn, this is a nice entry. If this is going to fail, this is the classic way it would fail. Full stochastic gets oversold, a brief bounce, and then it dies. So watch closely. It's not a place I'd want to hang my hat right now. And then looking on coal and steel, trying to get back above the 10-week moving average. Our good friends in the steel business did, so that's a positive. Like to see that happen. That's a very nice sign. Okay, lithium still below the 10-week, and rare earth strategic metals got above it, but as you can see, sideways for the month. Want to keep watching those, but no real breakouts yet. This is a really interesting chart this week. This is the Goldman Sachs Energy Index. And what I want to talk about here is we've got a higher low forming and a lower high forming, and we're right focused around the 40-week moving average. A breakout either way here should really be respected. The PPO is set up beautifully. If we turn and took out this downtrending line here, I would be very, very bullish on this whole thing. Obviously, the news out of Iran this week added a little bit of pressure. When you start shooting down U.S. drones, that'll do that. But if this starts to turn up to a higher level, I'd get a lot more interested in the energies, and I have started to put some in my portfolio. Okay, so let's go back to this one is agricultural index, and we're just grinding sideways, so nothing really to get excited about there. On the livestock index, again, that chart's just brutal, heading down south. So nothing to go on there. Looking at the industrial metals, this slight little curl here is important. RSI bouncing off the 30 level, which makes it a little bit more bullish, but as you can see, the red line suggests we're in a bear market. Now, if the US dollar is going to start falling now, this probably could get all the way back up to that red line, and then we could start to worry about what it wants to do there. Here is the upslope in momentum and a small downslope here. Looks to me like we're in the zone where we're ready for a bounce here. So if you could play these for the summer, that would be a nice kind of setup. Looking at commodities on the big picture, total commodities index, we've got an uptrend going here. We've got an uptrend in momentum, and it looks like if we just zoom in here, we're starting, this week we had a little bit of a curl, and if this curl's right at zero and starts to break through this downslope, I mean, that's an 18-month downtrend. I want to be a buyer on all of that, especially with a declining US dollar. So looking at the Baltic Dry Index, one of the things here is the RSI gave us the oversold signal. You could draw a trend line at the 60 level and just keep track of that. You can see that in this bullish run up it stayed above 40, and now all of a sudden it's dipped below 30, so that's a bear market signal for us. Now we want to watch it and see if it can get above 60. But got to a deeply oversold level. I do like the fact it's broken this downtrend line. Looks like it could kind of turn higher, and that would confirm some commodity stuff. So that makes it much more interesting. XLE got above the 10-week moving average or 50-day on this chart. You can see some horizontal resistance sitting here around 63, 64. We'll watch that closely coming into there, but again, I'm starting to like the looks of it, and this down sloping line here would get broken this week if the trend continues higher. Crack, which is the ETF for the refiners, held support at 26 very nicely, is now making a higher low. This didn't look like it had any support here and was going to fall apart, and came down here on the full stochastic, and now we've got a buy signal on the majors. And again, I think any sort of unrest in the Middle East will do that with oil-related stuff. So this is starting to turn up here. First week of a better PPO. This is just tentatively looking better, still below all the moving averages, so hard to get too excited, but I do like the fact that it's improving. Frac, the unconventional oil, had a big push on Thursday and then just a middling day on Friday, and again options expiration day, so this chart shows a bigger volume candle, but you can see on a relative scale this one back here in late December on the lows, somebody stepped in and bought 2 million shares at $10. Not a bad buy. Anyway, big bar that day, and dwarfs all these other bars. But the important part here is we're still below the 10-week moving average, so let's not get too excited. Frac on the weekly, all of these PPOs are trying to make a higher low this week, which is really important to me, and so I'd like to see that happen. Obviously, if price starts to turn up here, this is a much better place to get on board. Kind of the secondary low is a really, it's like a test of the prior low, turns it goes higher and starts to work up. Crude is still below the 200-day downsloping and the downsloping 50-day moving average. This isn't exactly a bullish setup, but we bounce up into here next week around that $60, $58 level, and we'll see if anything happens. And you can see this horizontal resistance coming in over here, $58 or $60. Both of those look kind of important, so stay tuned for that. We could get all the way to the $64 and then really start to wonder when we get up in there, but there's starting to be some overhead resistance in here, so just keep an eye on that. West Texas crude, I really like this starting to turn up the PPO right around the 0 level on a weekly chart. Full stochastic buy signal this week. We're below both moving averages, but that big price bar this week suggests higher highs, I think, on a weekly basis. So we'll keep watching. Looking in on XOP up here in the top, so the oil Exploration and Production ETF, this is not broken through the 10-week moving average or the 50-day on this chart. Big problem there. And again, using USO for crude oil, you can see on this one, what we have here is this. Actually, this is the real WTIC, but all three are meeting here. This horizontal support and resistance, the 200 and the 50-day moving average, pretty important convergence spot, and if we could break through all of that resistance, that would be a nice plus. Anyway, starting to like the setup in energy, with the exception of natural gas. And one of the things I like here is this is really starting to bomb out. And if we had another big candle down like we did back here in December 2015, this was an awesome trade from $1.60 to $2.50 in a few weeks. If you do the math on that, that's 30 or 40%. So real money could be showing up here. Anyway, I like the fact that we're way down here with a PPO down hard. Doesn't mean it's ready yet, but it definitely puts it on the watch list. We even with options expiration this week, so we had lower volume. So that does tell me that the selling, while high, is didn't have a capitulation sort of volume. We might need another week for that. Anyway, keep watching it. I think that's an interesting place to look at. RSI at 30, so it's calling it a new bear market. And that's just another look at it on a daily basis, and you can just see Friday closed flat, so maybe there's a bounce ready here, but keep watching it. I think that's an interesting trade. Nothing really looking positive here on the natural gas chart. So Cabot Oil and Gas way down here near the 2019 lows. So all of these look bombed out. Let's get on with it. Nuclear, this ETF, this is for the power generation companies, bouncing off the 200 and heading higher. You could just see this, looks like a smoke plume or something off a flare, or a dispersion of light off a lighthouse. As this is going out here, what we're seeing is just kind of indecision as it wobbles in this range. It's going back to August of last year, so haven't really made any money in there, but you would have got some dividends. That shows up in that chart. This is the more interesting one. This is URA, the uranium miners, and one of the things that's happening here is PPO moving above zero. We're testing this trend line, and again, it's our good friends in the Cameco business, and you can see Cameco tested this 1225, or this uranium chart tested 1225 18 months ago, and that was when Cameco was closing some mines to tighten up supply. Well, we're back at that level, and a breakout here would be pretty interesting to trade, so watch that closely. Here's Cameco just for reference, and again, they're the big dog in the uranium business. So keep watching this area. This is a nice little base it's built here. Any sort of upward progress, I think you want to own it, and look at the volume starting to show up. Relatively quiet through most of June, and then all of a sudden, 6 million shares traded very quickly here. So this is looking good, starting to shape up. Okay, let's get back into it. Copper, let's just take a look. The one thing I like about copper here is just starting to turn up, testing the 10-week, full stochastic buy signal. We have a higher low on the PPO histogram. Excuse me, and then on the volume, another couple of weeks here with high volume. So all of that looks much better, and hopefully we can get another run going here in copper. Copper bouncing off this 12-year trend line or 17-year trend line. I love that. That is as good as it gets. We could obviously run another trend line off the 2009 low, and that would give us support a little bit lower. But this bounce right here, those trend lines kind of set up that way, and all of a sudden you get the bounce out of there. That's a nice place to add. So I have some miners in my portfolio now. Looking at copper sub-index, we'd like this PMO line to get broken in this case, and a break to the upside would suggest further gains for copper. I'm talking very positive about the commodities, mostly with the backdrop of a falling US dollar. It sets up really, really well. I can tell you that I'm still nervous about the broad market, and I'll show you the transports and semis in a little bit. So here's steel with this higher low, couple of weeks in a row now on the PPO, starting to break out. It's moved above one of the moving averages, so we're starting to get there. And I think any sort of move up, you probably could own this ETF or start looking at the individual steel companies. Aluminum, that downtrend hasn't been broken yet, but it's very close to breaking out on the PPO histogram. So if momentum starts to improve, that usually precedes price. So keep watching there. The miners chart obviously moving up nicely on the back of precious metals, and look at people step in to buy this. All of a sudden, this thing does about, call it 2 million a day on average, and here we go to 7 million, 6 million, 10 million, 4 million. So maybe it needs a little bit of a breather after so much volume hitting it, but good place to keep watching, I think, for sure. Canadian Metals and Miners Materials ETF. This thing just popped nicely, and it's been a really nice move off the 1st of June. Gotta like that. So here's gold on the weekly, and beautiful move above 1400, closed right on 1400 on Friday afternoon. Gotta like that setup, going back multiple years. This is as clean a breakout as we're going to get. The huge volume showing up here. Now, some people call that exhaustion. I think it's initiation volume, but it could still consolidate, come back 40 bucks, and I'm pretty sure at 1360 you'll find a handful of buyers stepping in to pick it up. That's where I'd look for a lot of support, and if that didn't hold, that would be different. Last week on the Friday, we had the US dollar kind of give us a reversal, so we had a poor price bar, but we still closed higher. On Monday, we tested lower and closed in the same range, and then really the rest of the week it was up and away, and look at the volume hit this 50 million shares a day on the gold contracts. So that's really moving nicely. And then here's the dollar gold, and you could just see this horizontal resistance level, and if we take it back a few more years, just how important this is. This was a breakout from 2013. That's what we call a base, and it was just a beautiful breakout. Higher lows coming in here and a pop out to the upside. As much as I took some of my trade off just to give it room to wobble here, but I still have half a position on, and it's a nice trade, and I still think it could work higher, but lock in some gains. GLD, again, pushing nicely. We talked about this forever, how in May it had a whole bunch of silent volume weeks and then all of a sudden soared. This is really nice. So we'll just keep watching that. GDX, this level has been on this chart just forever, and finally getting back through $24 is pretty important. The one thing I liked is back here in 2016, this shot up from $12 to $32. Any way you look at it, that's a big move. We're just getting started here, so a little bit of wobble in here wouldn't be totally upsetting, but I think it wouldn't be uncommon for this thing to just keep ripping, not give anybody a chance to get in. Looking at GLD compared to the SPX, it's still, SPX had a strong week, so did gold, but slight improvement here. But we saw this same sort of positioning back here in 2016 when all of a sudden this started to take off. We had an original push out, come back, and then the second push was really meaningful place to get involved, and the stock has really started to move since then, or the price action. So silver, trying to break this big downtrend line, and you can see we have a lot of nasty moves above it that didn't hold. So trying to figure out what's going to happen right here. Look at the volume come in though, max volume. Perhaps that's indicative, that's all we get, but I really like the higher low and momentum. Any sort of break above zero level here, especially if it got to a new high, I think that's going to happen. The fact that gold's already done it suggests to me silver follows along. So silver miners are a good place to watch for in the next couple of days. Friday's price action after that big surge on Thursday. Again, a little bit of a retreat back, whatever, in this case to $14, I think looks pretty good on SLV. On SIL, very clean price action to hold up the week. We closed right near the highs. Everything's good about it. The PPO turned up, gave us a positive signal. It's higher low. We had some positive divergence. Everything sets up here quite nicely. So like the price action a lot in these precious metals. Not going to go into a lot of these charts because we don't have time, but here's lumber. Just keep moving on up, which is very bullish. Talked about this last week with OSB and the wood ETF. So that's nice. And here's wood showing up with a higher gain this week, moving back through the 10-week moving average and trying to make a higher low here. We'd like to see that confirm and push up. We're still under zero, so we're not out of the woods, but a higher low here is a good place to start. And this downtrending line, when we start to break that, that'll probably attract a lot more interest as well. But this looks like it wants to keep going. So excellent. No real news all the way through here. Nothing to talk about in the cars to speak of. I will say that they did bounce off the 2016 low level pretty nicely. While we're here, let me just point out the Shanghai. And the reason I'm getting a little bit more bullish on the world is the Shanghai has made an outside bar on the monthly, even though the two leaders haven't got together to speak yet. There's a little bit of optimism. They're still talking like things are going to go okay. This push higher here to new 2-month highs on the Shanghai, pretty important. Where would the PPO be turning up? Right above zero. This is extremely bullish, and the full stochastic starting to kick in. So some people obviously think something good's going to happen next week, and these charts are setting that up. The Hang Seng on the monthly hasn't broken its downtrend yet, but I want to see that. Still trading inside the range of last month, but the 20-month moving average has rolled over here, and we're testing it as well as horizontal resistance. So even though it was a tough week in Hong Kong with all the protests, the market still behaved positively. Again, we're sitting right up at the 20-week moving average and the PPO right at zero. And this is the kind of setup we just had in gold, where it ran up, pulled back, and it was right here that it was a nice entry. So keep your eye on China. It looks like a place where maybe we can put some money to work. On the opposite side is the Nikkei. And again, we're hovering right around this 21,000 level, and the momentum is still down and out on the monthly chart. And on the weekly chart, it wasn't much better. So not overly optimistic yet. Just to zoom in here, look at the weekly price bar compared to everything else. So got above the 20-week moving average, pulled back down and closed near the lows. Perhaps it's going to get something going, but this was a pretty, considering rest of world had such good price bars, that was terrible action, and it stalled at the 40-week moving average. It's bouncing off the full stochastics. We're on a buy signal, but look at relative strength really starting to plummet here. So that's one of the big markets that makes me nervous. And if the yen's going higher, we're probably going to see the Nikkei go lower. But that tells me to get long commodities, and we'd still be okay in that space for a while. Just to maybe we'll show the country charts for these commodity-related indexes. Australia pushed to new highs again, and that was one of the clues at the end of May how well commodity countries did. Well, they've been on fire ever since. So really a nice push. Canada still trying to get through prior resistance. We're right on this PPO trend line, so which way do we go? Hopefully we follow Australia higher. That was monthly. Here's the weekly. Had a big push on the week. We've got lower momentum so far. Now, is this just going to turn and fire up? That's what I would expect with the US dollar failing. So keep watching the Canadian situation. I think it usually does a good job of leading the US market. If we're going to stall, Canadian as a weaker market would stall first. Brazil broke out on a monthly chart to new highs, and on a weekly chart, that just looks positive, that nice breakout to new 2019 highs. And look at the PPO cross above zero. This is just bullish. And again, all of these commodity-related countries are doing this. Here's Russia breaking out to new highs. What's not to like? So it's just Canada that's kind of got to get its wheels in motion. Hopefully they can hit the transmission and shift to high gear. Okay, let's go up and look. Let's start in the currencies, because I think it's an important place to play. There was lots happening in there, and I want to show that. Last week I mentioned how important it was, and this week it came out. So we had a big down push. We had broke below this upsloping trend line, and I had the trend line a little tighter. I had it up under all of these lows and had this one sticking out. Well, last week it reversed back up. You can see it better over here, but this week it kind of confirmed everything and broke down. Doesn't matter how you draw the trend line, it's down. And we're still above the 65-week moving average, but everything else has shifted down. The next charts talk about the 200-day, and all of those are broken. So this dotted line is the 200-day moving average. This 97.50 just couldn't stay above it. And the special K, we had this downsloping trend line here. We broke through it. Now we've rolled back over. We've broken this one-year uptrend now. So from my opinion, this market wants to go lower. KST is pointing lower. There's not a whole bunch of support showing up. And, just comparing to the beginning of the year, we're right back where we started, so there's no real gain on the year, but we're below all of these moving averages. The 65-day, the 200-day, we're falling. And we talked about this on June 1st, how this was an important momentum spot, and sure enough, it failed, rolled down, and here we sit, breaking this upslope on 18-month upslope on momentum. That confirms the breakdown to me. I think it's time to leave. So, and just to show you, back here, we had an uptrend. It broke, and we went below zero, and then we turned back higher. When you look at this big picture, we're clearly breaking down a lot more, and I would say this longer trend line is much more relevant, and the fact that we didn't hold it suggests to me that we go lower. So be very, very cautious here if you want to be long US dollar. I think that's going to be a hard trade. This is the UUP, and obviously it broke on Friday with a lower close. And again, that was options expiration, or a quadruple options expiration day, so just a high volume day in the indexes, but all of these currencies responding well. Look at we had an inside week last week for the euro, and now an outside week this week, and closed right on the top of the bar. Any break on this PPO downtrend line through to the upside, that's going to confirm the break, but we already got that confirmation on the Swedish krona, which I like to help with my positioning on the euro. So this is starting to break out to new 3-month highs with a great back test here last week, and now push up. Everything on a daily chart, on a weekly chart, just shapes up very, very nicely. So PPO was bouncing above zero. So here's the Swedish krona, and what you see here is this PPO trend line is already broken, going back to early 2018. 4 touches. This is a nice place to get through. Positive histogram starting to accelerate. We broke out, pulled back last week, and then soared. So I like the setup here. It tells me that probably everything's engaged to go higher. That would be my bias. British pound is interesting because it did not break its upsloping trend line here and on the momentum. And so if it's going to bounce here, that's very bullish, even though price came down to test December lows here. We got right down on price, and then of course the momentum index is higher, but price is at the same level. So this was an important level. We're trying to get through this 3-year trend line here. It looks to me like this wants to bounce and follow the rest of the world up. Let's just go over to the yen. So the yen had this big push finally above this trend line, just zooming in. This is a really nice, and we closed at the top of the bar, unlike here at the end of the year. So I like the way this is working, and this is the gold line, and it's obviously telling us that's going to work. But look at the PPO line here. It's confirming this breakout. We marked this a couple weeks ago. Everything's starting to head higher. I think it's on a different chart, but everything's starting to head higher here. And yeah, May 31st PPO breakout. So that's really positive. And the yen with a high close, breakout ahead based on the PPO is what we had written, and sure enough, off we go, which has helped the gold trade immensely. So I think we're just getting started. Now we could just move up to 95 and stall a little bit here on the yen, but you see this big giant uptrend we had here. Well, now we're threatening with a break of this 3-year trend line, and there's a longer one here that doesn't really these three tops don't line up with anything down here. So maybe we go up and do some work up around the 100 level or whatever. But when we get up there, we'll worry about that. Right now, it looks like we got room to go higher. And I expect that to push the Nikkei lower. Okay, yeah, so here's the yen just trying to test the 2019 high hit on Jan 2nd, and then we're sitting right up here, tested up above it and then pulled back. This 93.2 level where we closed at is a pretty important place on the chart. Let's just see if it continues or if it comes back a little bit to test and then takes off to the upside. But it's been a big move already, so wouldn't surprise me that it needs a little bit of time to pause. Canadian dollar got right to the 65-week moving average installed there. Closed the week kind of middle of the range, but that suggests to me that move higher in oil prices is probably confirming as well. So I want to keep watching those kind of things happen. On the daily chart, Friday's reversal was a little bit weak on the Canadian dollar, but again, we keep gapping over this 75.4 level, and that was a nice breakthrough there. I think now we have a series of a high, a higher low, a higher high. That's called an uptrend, and on the daily chart, we'll just keep watching it. We did have that same sort of thing back here, and we stalled around the 76.5 level. But it's the breakdown in the US dollar on the big picture against all the other currencies that suggests bigger upside here. Aussie dollar made a slightly lower low this week, but closed up near the top of the bar. And on the PPO here, it's still a little weaker than the other charts, but it's holding this 2016 low right in that area. A break here is a pretty big deal, so keep watching the Aussie for that. Let's just roll on to the emerging market currencies and look at this beautiful move. This is exactly what we would expect if commodities are going to rally, is a breakout in this emerging market currency. The PPO on a weekly chart bouncing off zero, that doesn't get any more bullish. We crossed the signal line as well. So this chart just confirms my bias in the commodities long position, so we'll keep watching that. But everything's set up so well this week that way, and the breakout in gold to match, oil pushing, copper trying to turn up, they all look like they want to move that way. We have lots to talk about in the bond market. LIBOR continues to drift lower. This is just weak, doesn't give me any confidence. But look at this high yield chart. This broke out to a new high, gave a PPO cross above zero. That's just bullish. This looks like it wants to head higher. So if high yield's heading higher, you probably want to be long the market at this point. IEF heading higher. So, but again, I think this move in the bonds needs to pause. Maybe I'm wrong by a week or two, but just seems like it's pretty extended to me. Here's the LQD, the corporate bonds, and this is the unadjusted, so we haven't, we've backed out all the dividends, so it's just price. And what you see here is, you know, in the last 7 years, we've stalled at this level every time. So probably a better place to be expecting a pause in the price action, and the PPO is way up extended here at this high level. So nothing really says go higher on these bonds, and on the 10-year it looked like we had a reversal bar on the week. So again, I'm still interested how the 2-year had kind of rolled over, and when it fell below 50, that was a meaningful place to be aware of on the overall indexes. You know, we fell below 50 and we rallied. So you know, perhaps the Fed can drive this bus a little higher, but it just seems so hard to me. When I look at some of these bond charts, they're signaling heads up, but again, we'll continue to watch. The tips chart, one of the issues I have here is this PPO is all the way, well, MACD in this case, is all the way up near the top of the range. And that top of the range, I think, is pretty critical. So gold follows this chart, not bad. Gold obviously being in the yellow here, and that's crude oil, which doesn't follow it quite as well. So let's just, I'll silence my crude oil here by changing the opacity to 0. And that just makes that line disappear. But you can see this is a pretty good correlation between the two, and gold soaring here is pretty nice. But again, gold's up $120 off the off the May lows. So we're probably at a place where gold needs to just rest a bit. And this is soared in a big way, and it was the same move we had in 2016. So this move popped all the way up. Now the gold miners rallied all through this time here, and they made huge gains. We'll just keep watching this to see if this starts to stall and suggest that the move is over, but it might continue to run like it did way back here in 2011 and 12. So keep watching. TLT, way up here above these previous levels, but it's been flat for a couple of weeks now, so just keep watching it as we've tested the high. And MYI, this is another one that I use to help me track the 10-year, and it's been flat, wandering higher, but relatively flat compared to the big moves we had prior to this. And the PPO looks like it wants to roll over, so starting to tell me that caution is warranted if you own TLT. The 10-year, with the big bounce off the low this week, we closed in the middle of the bar. Again, RSI is right on the trend line, where if it was going to bounce, this is where we'd expect it. And the PPO could actually come a little bit lower, but it went negative. The one thing I'm puzzled at is, negative in 2019, negative in 2014. Now, again, the stock market didn't top till 2015. So, maybe we just get a brief bounce up and then that's a final high. I don't know. But in 2007, late 2007, when this went below zero, that was a pretty meaningful clue. 2000, when this went below zero, that was a meaningful clue. 1997, we had some problems. That was a meaningful clue. Again, all of these were index weakness. 1995, we had some weakness, but it didn't end up being major. And then in 1991, we had a big problem. So all of these negative positions here, and yet we go negative, and now it looks like the market wants to rally. It just doesn't quite fit, does it? So watching that, big deal. Here's the 2% level on the 10-year, and that looks like a place where the market could probably try and build a bounce. The 5-year plummeting hard here, and the bankers in red here have gone sideways for the 5 months, but haven't really had much to talk about. I think we get a bounce here on the 5-year. This PPO is way down here at a pretty low level, and so from here, a move up could be dramatic. Now, I will say in 2007, when things started to unload, they just kept going. I don't know that we're in that position, but again, we talked about the calm before the storm here. That's what this line, the red line, was indicating. And now this thing is shooken up quite hard. That goes back to 2007. We've clearly snapped the trend line here, but we did that in 2016 as well. So keep watching, but it's this calm before the storm that's so much different than 2016. If you unwind this tape, you'll also see that happen back in the late 90s. So there's not a lot of bias for me on the bond market. It looks to me to tell me to get out of equities, but until the trade starts to work, that's probably not a good idea. This PPO on the US 10-year, 2-year bond, just check this out. When we unwind this, you'll see that we're at 10, and I thought that looked pretty extreme, but it was nothing compared to the 08, 09, 2010, 2011, and again, all in here was a whole bunch of quantitative easing. So if all the governments like England started, or Europe started to talk about more of that earlier in the week, so maybe this whole thing keeps going. IRX, that thing is just falling apart. That's the 3-month yield, so price is soaring. On the 30-year, I looked at this. The MACD looks like it's getting a lot closer, but on the PPO, again, this uses percentage. This uses the actual price. So as the price goes higher, this range gets less and less meaningful. But we're going higher here, and this 2%, lots of times it stalls around 2%. You can see that in here, but there's lots that get up to this 4% level. So we're by no means extreme on the 30-year, and we have lots of room to go. But again, the big point I would make is it is not uncommon for this to take years to run all the way to the other side of the range. So a little blip here doesn't just suggest that this is already over. Okay, so we had the big exhaustion move down here on the USB, and now we're way up around the 155 level. And what that suggests to me is, there's resistance at 157. So this is probably not a bad place to expect a little bit of a hiccup. Look at how high the full stochastic is. It's soaring right near the top, 97.38. That's crazy high. And a little bit of a pullback wouldn't be a shock. Anyway, keep that in mind. Everything on these bonds looks so stretched. And big hammer candle on the 10-year for the week on the yield. It literally pounded all the way down and closed right back where it opened. So this looks more like an upside reversal, especially after I had written in here last week that this looked like an exhaustion bar with a couple of wiggles. Well, we tested lower and popped back up. So to me, it seems like there's no more buyers for the 10-year for the brief time now. So we'll probably expect a pullback. And the TLT unadjusted, or sorry, regular, so with the dividends in it, right back to the level where we reversed from before. Not a bad place to say take some money off the table. Okay, the spreads. So this chart continues to worry me. It looks dramatic the way it's tilting down here. The one thing I would say in this particular case is this is the 1 year, 2 year, and 3 year, and the 3 year is in green. And so the issue here is it's still well below the bottom. And it's once these things start to normalize their shape that the actual trouble really showed up in here. So if the 3 year gets back into the range between the 2 and the 5, that would probably, a normalization of that yield curve would probably be a big deal. I continue to think this breakout here is trying to tell me something. This is the ratio of the 10-year to 30-year. Again, it popped to new highs and broke out, but we still see the stock market trying to go higher, so maybe everything's going to work out. Transports, let's cover that off because that was messy. What we see here is they're stalling around the 200-day and the 50-day, and we also had this same stall right here in early May or mid-May, and we moved down quite hard. So watch closely as these transports. I just think there's so many issues, and see this trend change, how it fell below this red line and then rallied back up and stalled here. Well, guess what? We fell below the red line, rallied back up. Are we going to stall here and create another trend change? So watch closely. They're really risky here for me. We haven't had a lot of good data out of the trucking. Okay, so weekly chart, we have full stochastic bouncing, which is fine. Airlines, they don't look great. That looks to me like it's rolling over again like it did prior. PPO is rolling over at a lower level. The last 4 bounces have all been up at this 2% level, so to roll over at the 1% I think is pretty worrying. On the weekly chart, of course, all of these are putting in a bounce with the index, so this looks way bullish because it bounced around the 40 level. I would expect if it gets down deeper, that would be worrying. We do have a down-sloping trend line on the airlines here. Until that gets broken, I want to stay on the sidelines. Don't have a lot of faith in that one breaking. On the daily chart, the railroads are starting to look very problematic and briefly got right down to this relative strength trend line. If you start to underperform the S&P 500 after outperforming for 2 years, I would say that's a trend change. So that's a problem for me. Let's just give it some space and watch what happens this week. But if this can break back out and hold up, that's bullish. If this fails to break back out and keeps rolling down, literally I would change my tune to quite bearish quite quickly. If the railroads start to indicate bigger problems, with the quadruple witching on Friday, this would be a great place to expect a trend change, and that would do it for me. Looking back to this 4-year trend line, there's a little bit more room on it. We have room all the way back. Could come down a little bit, and that would mark relative strength lows for the year. So again, a horizontal relative strength low. We're not far off a 3-month breakdown, but anyway, the bottom line is, to me, the rails look iffy. We saw the PPO roll over back in late May, and the other thing is that we dipped below zero, so the next high has the potential to be the final high, and if we just saw that in the railroads, that adds caution to me. So the railroads paint an ugly picture for me. Not an ugly picture. The railroads paint a picture of concern to me right now, and until they break, they're good. If they don't hold, then I would be much more bearish. And so want to watch the railroads closely this week in a big way. Trucking, right back to resistance. So if you were going to fail, this is probably where we'd expect it to fail. And the autos, this chart downtrending, rolling over at the 50-day. Who would be surprised? PPO right back at zero. That's just kind of how bear markets act. So we'll keep watching, but it doesn't look great. Okay. We have a few more minutes, about 10, so let me keep running here. The one thing that I will say is impressive is the advanced decline information. This is continuing to trend higher. It hasn't got back up to the May highs, even though price has, so that's a little bit concerning, but it's still okay. Now, when I go to the high-low data, this actually made a move above this 100 level for the first time going back till September of last year, and this is what was bugging me, that this wasn't happening. Well, this nice push is very important. We closed Friday with only 17 net new highs. The day was down slightly. It wasn't down hard, so that was a pretty weak number actually for me. I will point out that in September 2018, we briefly surged above here and then failed after kind of being stuck below it for a couple of months. I don't think... I would rather be bullish here because I think the Shanghai chart looks good, the Hang Seng looks good, a couple of guys meeting for $3 trillion worth of coffee or something if we can hold up these markets. But the point is, this push here suggests to me the stock market is trying to make higher highs and more stocks are participating, so that's a pretty bullish thing. For the New York composite, the advanced decline is soaring and looks very strong. Again, it's not going to help me with the day-to-day picture, but it does surprise me that it pushed all the way to that big high. Now, this chart has multiple pushes back above a level that had been restrained for 18 months. We talked about that 1 or 2 weeks ago, and I said, if anything makes me change my stance from bearish to bullish, it's the start of this kicking up. And again, if the commodities are going to start to run, that probably says more good things are on their way. And the rest of the world, if it starts to pick up, then I just want to get on board. And the commodity-related portfolio stuff's really been accelerating nicely in the last couple of weeks. I will say for the TSX, we're right up at resistance here. It's got to push through. We did see the rest of the commodity countries get going, so hopefully Canada can follow along. High lows for Canada, still timid, nothing breaking out. It's been 2 years since we've had more than 50 net new highs on a day, so a little problematic on that front. The McClellan oscillator looks good. It's still pointing higher here. Actually, the summation index is higher. The McClellan oscillator is above zero, kind of at a level where, on an average run here, it's going to top out at these sorts of levels. I would just say that if it starts to fall down and hovers around zero, that's probably a bigger clue that we're going to have more trouble. That hasn't happened yet, so we got to give it some room to oscillate. We've been going up for quite a bit here. We're heading into the bullish part of the month, where the last 5 days heading into month end is usually pretty bullish, so hard to want to get too bearish. But again, we just had quadruple witching. I see things like the Nikkei bothering me, but again, other charts are kind of, the weight of the evidence seems up, not down to me, but there's a few charts that keep me on my toes here. Summation index has bouncing back up. That's just positive. If it was to stall in around this 400, 500, 600 level, I wouldn't like that. That was kind of what happened here in 2017 and 18. That would start to bother me again. We'll see if that happens, but that would be some levels to look at on that chart. For the Nasdaq, summation index is bouncing off minus 200. Usually that's pretty bullish, so just keep that in mind. They're trying to bounce, and so unless the bounce stops, that would be a big deal. Nothing really to show on the bullish percent indexes, so I'm going to skip over them. They weren't that bad. They're marginally improved. I would suggest they aren't going up as fast as I want them to. But the S&P and the Nasdaq 100 both look great, so leave it there. So gold, the big thing I want to show here, let me just widen out this trend, and I mentioned this on the on my blogs last week about gold. The bullish percent index, let's just move this line to 50%. And the one thing that you see is when a lot of these gold stocks get bullish, this bullish percent index starts to run up, and we're moving above 50% here. We got to 56%, so even with that big bullish thrust, it could only get to 56. However, that is at new 3-year highs or 2-year highs, and getting through 60% would take it above the 2017 run. But it's this big run that we had back in 2016. And when that run took place, that was pretty bullish. And again, the US dollar pulled back, if I'm not mistaken, and we saw the rest of the world stock market start to accelerate. So a rotation into rest of world would be pretty important here. Commodity countries kicking it up, that would be very bullish. So I want to continue to think that way with that chart pushing to new highs. The options expiration, just show you by comparison. Look at the volume surge we had this week. Went from 2 billion to 3 billion in one day. Last time we had that sort of surge, March options expiration, December options expiration. So even in the middle of supposedly no volume around the Christmas season, we saw 5 billion on that one, and that marked the lows pretty much. It was a couple days later we had a bounce out of there, and it was big. I think it was Tuesday after the options expiration. So big move. And then back here in September, another big one up around 4 billion. So these highs are all marked by options expiration. I will say that this wasn't as big as the last three. So perhaps everybody's comfortable and we're just going to go higher. I don't have a feel for that. But I continue to say watch it closely. The Nasdaq has not broken out to new highs yet. And Friday's price action was average, nothing really to talk about. The S&P is really focused on testing this prior high at 29.54. We closed at 29.50. So pretty important week just going forward from that perspective. Again, the Fed meeting was on Wednesday, so that shook things up a little bit. And you can see that the last Fed meeting here kind of stalled the market out in May. So keep watching. With the Fed meeting and QE out of the way, now we're probably looking focused on the G8 meeting or the G20 meeting. So we'll see if that changes anything. With the S&P here, we're up around 3% for the month, so that's pretty good. Nice run. And then year-to-date performance back up to 17% on the year. So very positive. I will say the push this week on the Nasdaq and on the S&P was pretty good. Wasn't that happy with the push on the Russell. We're not getting back up to the resistance level here. So want to keep focusing on that and make sure that we break out. Okay, with that, thanks for taking the time to join me. I hope you found a lot of useful information. I think it's time to get long commodities. You want to be long the market here, but you definitely want to watch to see if it all falls apart on the back of the Nikkei and options expiration. Thanks. Bye-bye. Here's how to add a moving average for the volume on your charts. You can't use this volume component here, so go down under Indicators, select Volume from the drop-down menu, and then put the period that you'd like on it, and you can specify the color of the moving average line. Click Update, and that will give you this nice little line on here so you can see if it's above or below average volume. This video will show you how to add a date line to your charts. So if you have a whole bunch of stuff piled up here and you want a date line farther down, there is a way to put it on there and how to move it. So down here under Indicators, it's one of the options, date time axis, and by just moving it up and down with these triangle arrows, and notice this little blue arrow that moves with it, it'll help you position it exactly where you want it.